Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 19th of May, 2020, and we're getting on to 5:30 in the afternoon. That's p.m. Central Time. Interesting day. By the way, you know I'm doing these a little later by design every day. I want to catch the reopening of the market, since why do it at 4 to 4:30? I was thinking this. Since I'm not in the office and don't have to run home and have a family life, I'm home already, and they want me down here away from them. All right, so let's talk about today, because the market tried to hold on all day. I kept reading the reports throughout the day of descriptions of the market on many news services, and the word was waffling back and forth. Well, it certainly didn't waffle in the last 30 minutes. It broke and broke hard. And that's exactly what I was looking for. I was looking for a failure on two things in stock indices: up against the upper Bollinger Band in most of the indices, and a reversal from a strong Monday called the Tuesday reversal, as I talked about yesterday. Got both. We're getting good action still in the gold. Silver's overdue to give you a little bit back of movement here. Foreign currencies, I wouldn't be surprised if the euro's ahead of itself. It's had a heck of a rally over 2 days. On the energy markets, if you looked at the API numbers tonight, you had net zero. In other words, the build in one area was offset by another, and you didn't build any real stocks. Yes, you built, let's call it, you built some crude, then you took it away in gasoline. You know, it goes back and forth. But I look at the net, and as a net, I was satisfied. So I think that's supportive, actually, of the market. Bonds and notes tonight getting a little bit of a bid. As the market is getting concerned, it is rethinking. I was laughing today late in the day. I think it was Fox News that I was watching, and the market started rethinking, that's the word used, the Moderna comments made yesterday. Well, I think I was pretty clear yesterday here, and I love Fox, you know, I'm on it a lot. And phase one, how many countries in the world, the equivalent of a phase one, do vaccines make it through? Many. You got to get through 2 and 3. This is a good step. It's not failure for Moderna, but it's not a vaccine either. And you've got a ways to go to prove this situation. Now, whether traders turn fickle or not, I don't know. You know, news broadcasters are always looking for reasons why, and often they're there from a technical picture more than anything else. When you and I look at the market, we know that the market's trying to make a run to the 18-day average of closes. I don't know if it'll succeed or not, but the 29.22 area is certainly an area for resistance on the weekly chart. Now, that's different than the daily charts. When we go to the daily bar chart, as you can see, this market's made a 62% correction overall. So if it breaks above this and much more, I got to throw the idea of Fibonacci counts working out of this. The market's much stronger than that. The other thing that's got me scratching my head, I keep going like this. I'm going, you know, I watch some of these, what I think are the best minds in the trade, and most do not think that what's coming is that bullish. We know that the psychology of a restart of the economy is bullish. I had to go today for a post-op checkup on my eye. So I'm walking down Michigan Avenue, our fabled shopping area, and that my doctor was in that area. And I'm looking in stores, and I was pretty surprised how many are not only empty, but off the side streets where the smaller boutiques are, they're going out. The big boys are there, but the others are going out. Then in my own neighborhood, I had to go get something for dinner to bring home. And I looked in one of these supercuts. All the chairs and everything is gone. So I know what I've been preaching is coming in some manner. You're going to see a wave of these smaller businesses, especially restaurants, because, you know, none are open in Chicago yet, but there's going to be real pain to be felt. When we take a look at the S&P 500 index in terms of a swing line, and that's this line here. I created this study many, many years ago to teach my son, who at that time might have been 13, 14, so it's many, 20 years ago. I wanted him to be able to look at something and I didn't want him to know the name of it. He wouldn't know what it is. Is the market pointing up? Down. And this is not pointing up. This is nothing. You've got a lower low, higher high. That's what I wanted him to learn. I wanted him to learn what a trend is. A trend's when you got higher lows, higher highs, and let the line show you. So I created 5 rules as to how the indicator plots on a chart, and then they're automated on the charting software. So as I have it plotted here, I don't see a trend. I'm not blind. I know the market is going up. But in the pure sense, is the market trending? No, it stepped out of the trend when you broke back over here. You came down, had a vertical move, came up. You've gone back to the 100-day average of closes, which is a big resistance point. Above it, the 200-day. Now, the 200-day is a very important psychological number for stock traders and stock index traders. That is their main number, I think it is at least, that they're looking at for the bigger picture. So market is challenging it after being all the way down here. Let's give the market credit, and those traders who, obviously somebody picked the low here and the market's come up. But you're in a resistance area and that hasn't been violated yet. For the neutral number on the chart, the 18-day average, what other number do I always look at? Bollinger Bands. Bollinger Bands, when you understand them, they're an algorithm designed to keep the market trading within them 95% of the time. So they're going to be hit. That's the idea. They're going to be gone through. That's the idea. But they're only going to stay outside of them 5% of the time. So there's an art to learning what they are. The narrower they get and the longer they go sideways, the bigger the eventual move. It's almost like a pipe and a spring in it that you keep winding and eventually it bursts out one way or the other. You're not that narrow yet. You can get narrower than this. But you made your first challenge of the upper Bollinger Band, and so far it's done its job in throwing the market back. If the market continues down, I'll look for support at the 18-day average, but I don't see buyers necessarily stepping in. You're not trending. You're whipping back and forth more than anything. And when I look at momentum, I define an overbought condition as any reading in the slow stochastic over 70. Well, I've got what's called the K line. The red line's the K, the D line, the blue. And the difference between them is the K line uses the same formula as the blue. One's got 3 days worth of data, the other 5. So the red is going to move back and forth against that number. It whips against it. Think of it like moving average crossovers. But as you hit certain levels, what the idea was, where do you get overbought? And then I came up with an idea because I saw it so often. Where does the market lock into a trend and the market try to pop again? So I come up with the idea of embedded. Okay. When I look at the NASDAQ, I have an overbought market. Both numbers, though, tonight are over 70. Now, if I go to during the day, they were not, nor the day before. So I have an overbought market, and what have I been saying to you? I thought this market would run into resistance at the upper Bollinger Band. Why? Because it keeps doing that. And it keeps getting thrown back. Now, this was Monday. This is today, and this is where you're at early tonight. Can you go higher and break out? Of course you can. This is not a bearish market. This is a bull market. This you have higher highs, higher lows. So on the pullbacks in the market, a couple of interesting things. Do I think that pros will buy at 90.40? Well, some might, but because you're overbought, a lot will not, a real lot. If you filter overbought, meaning you stand aside, you're overbought. If you get to this pattern where you embed, I'm certainly in there. So how do you correct an overbought situation? You either embed or you break down like this. If you break down like that, it's often accompanied by price dropping with it. In the Dow, same thing. You've gone from the lower band to the upper. This one is what I call the tight Bollinger Bands. So here we're getting to something super interesting. And I also told you, when you get into this tightness, this is where traders get chopped apart. Because what the market does is it wants to frustrate everybody. Not just one group, not the bulls or the bears. They want the guys that are buying it, why didn't it follow through? The ones that are selling it, how come it didn't keep going down? I'm buying it again, it's on its way up, it's going to keep going. It's staying within those bands, because that's what it does 95% of the time. Let it break out of them, and then we try to step into them. In the Russell, haven't been able to get to the upper Bollinger Band. Also, not an overbought condition, but also not trending. I think you'd agree, you got a higher high and a lower low. So you're going back and forth, and this 18-day average of closes, that line in the sand as I call it here, that is what's in play with the parameters set by these bands, at least right now. In the VIX, I was really hoping you'd get down to 27.12, because I think the pros would have written puts at that number to get back to the 18-day average of closes. What I'm noticing now is this particular strategy seems to be back in play. I don't like the idea of selling the calls, because this reminds me just what happened on the breakout. But in all fairness, if you consider what happened, it happened out of an extremely long duration of just going sideways and nowhere. What do I teach you? You get into that pipe, you keep winding it, and then you get that breakout. And that's what this was. This is classic. If I were in a school classroom, this is what happens out of it. You're not there here. You're back, I think, doesn't mean I'm right, I think you're back into where the pros are going to keep writing puts down when you hit the band, trying to get at the 18-day average. I don't think they're going to be wise guys and sell the calls on the top side. Let it happen a couple of times, then I'll have an idea if they're actually doing that again. Another market that you have to be super careful of is this. This is that narrow band. Again, you get spun around in this. I avoid these markets. You'll say, I want to trade it. Well, go ahead. Nobody's stopping you. You know, we do live in America. But you're trading in the other side. So for this to work, it breaks my philosophy. It means I'm buying under the 18-day average, which that's the first thing I teach not to do. I'm saying that the Bollinger Band means you're going to go back up. That's not how I teach it. It's one thing to take money off the table at a Bollinger Band. It's very different to go long looking for the market. But I recognize that when you get into those tight bands, that's what happens. I also recognize I like to stay away from that. Same thing in the 10-year note. You're just whipping back and forth. Now the dollar index, it's not far different. It's not as tight a band as the bonds and the notes, but you can see what's going on. It's a frustrating time for traders. They're trying to say, you got to be long the dollar. You got to be short the dollar. It's going nowhere. It's just against the 18-day average. You had this play where you got to lower and higher. Let it break out. Then we can step in. This is called getting killed. I've got gray hair for reasons. If you saw me and you thought of cheese, I'd probably like Swiss cheese. If something could have been done wrong in charts at some point, I probably did it in my 51 years. But if you do the same thing over and over and look for a different result, that's not exactly smart, right? In the eurocurrency, today was an exit day. You got up to the upper Bollinger Band. You know what we say. The first time you hit it, that's where the pros come out of the market. Now, the pattern is still not anything. You got a lower and low, higher high. The market's trying to set itself up for something. We heard yesterday Emmanuel Macron and Miss Merkel getting together on an idea of 450 billion euro. And then today, the European Union, the European Commission, one of their members came out and he's throwing the idea of €1 billion for some type of stimulus to go out there. So will they get that big? They rarely do, but it's good to hear it and it's bold to hear it. But that's why you came up in this market. The market wants to hear that. You need to get stimulus programs going. Mr. Powell, our Fed chair, has it right. Mr. Mnuchin has it right. We'll figure out how to pay for it as we fix the patient, as we find how to deal with this coronavirus, put it back in its genie bottle, and then we'll do it. And what Mr. Powell said today to Congress, this is going to take years. We're not going to solve this issue right away. Live with it. The market, listening to the Fed, knowing it has the market's back. The Fed said it doesn't have an unlimited balance sheet. Mr. Mnuchin said the Treasuries prepared to lose $450 billion in bad investments to support the economy. Yay. Not that we want them to lose, but you've got to fix the patient. If you fix that, we adjust to everything else. Let the patient die, you're in a Great Recession, and maybe the Great Depression again. Don't want that. Japanese yen, clearly in a bear move. Today, the pros, I think, took money off the table. And this is a clear bear move. Oversold now. You hit a combination of the 100-day average and the lower Bollinger Band. Bitcoin. The market's got a pattern of higher lows, lower highs, and it's overbought. Don't have any idea what to do with that. Then I look at the differential between the Brent and the WTI, and we're in the 275 level, so the market keeps working to lower levels. So what the market is saying in a nutshell, that Brent doesn't deserve that big of a premium over our grade. Okay, where did you go to? Well, finally, yesterday and today, both days, you hit the upper Bollinger Band, and now you're starting to bend. Now, the difference here is you've got, if we look at these numbers, let's get to, Tuesday is what I want. Both numbers over 80. Both numbers over 80 in the slow stochastic on Monday, not so on Friday. So, today is very important. If both numbers finish like this, then this pullback in the market will be a buy come Thursday, if the market stays with an embedded reading, and until that's lost. I always like to see what it's doing at least into the second part of the day, ideally into the last 30 minutes of the day to get a feel for what I'm dealing with. Same in the Brent, it's the same picture. So I'm getting more and more bullish. In other words, I realize the market's come up here, and I realize that given the right scenario, the trade is friendly. Now the question is, will there be a deep break again? I don't know. All these cars are hitting the road. When I went to my doctor, I had to drive around the block today 2 times to find a parking place. The other times I went, I found a parking place the first sweep. So there's more cars, more things happening in downtown Chicago. I can only look and see what I can see. The highways, I would say traffic's up from what it was last week, 100%. 100%, maybe more. So it's building again. So I think people are starting to travel and go wherever they're going. I don't know where they're going, but they're going somewhere. In the rebob gas, still a bull market. You got up yesterday and today to the upper Bollinger Band, embedded reading. I think the breaks will be bought and held on to until the red line closes under 80. In the nat gas, I wouldn't be surprised if you make a run up to this number eventually. You've got a pattern of a lower low, higher high. Now, I'm looking at what's happened here, so let's take a look. Did we ever get an embedded reading? Both numbers under 20, both under 20, both under 20, embedded. So we come back, when did it lose it? Right here. So today it lost its embedded reading. That means that unless it re-embeds tomorrow, Wednesday, the odds favor price will make a run at that 18-day average of closes. We'll see what it does here, but my eyes are on it, and given the right scenario, I call that a lost embedded slow stochastic trade. I'll be looking at what's called pivot points to see on a drop, does it make any sense for an attempt at a long position to get back up there. What's the get out of town number? You don't want to make a new low at 182.20, but this is a very strong signal if it holds up. So as I just said, I look at pivot points. Today I was looking at pivot points in a crazy market, coffee. And it's rare that I trade those exotics for my clients. Now, when I say I trade them, I put out trade recommendations for my written subscriptions to my clients. And I'm looking at the coffee drop today. This had to be 6:30 in the morning, 7 o'clock, right in that zone. And I saw this scenario setting up as the market's coming in towards this first number. Now, the first support's a very important number. You don't have to exactly get it there. What you have to, though, get with it is the market's you've got to always look to see where the momentum is with the market. So what I tie with it, and it's pretty simple, is, let's see if I can get this, my fault. If I can get the video going again. Here we go. This should do it, I think. Come on. There we go. It's going to go again, and I'll just let it all go. But to make a long story short, I tie the slow stochastic into the where the support zones, the pivot, are. And if you're short, you're looking for a way to find a spot to cover that's maybe different than your swing line or your 3-day averages or your 20 or your 18-day averages, whatever you're using. There's many different ones. So when I was looking at it, I saw a pattern and the market started breaking down just like it was doing there. And I pulled the plug. I wrote to the clients a special update. Turned out to be something I did right today. Thank you, God. So did something right on the market and feel good about that. So if you'd like to learn this, it's not hard. I've put together a 3-part series, and I believe in teaching in a simple way. I do a PowerPoint, then I take you right to a chart. I do a PowerPoint, take you right to a chart. Do a PowerPoint, take you to a chart. It works that way because the graphic makes you see it, and then you see it on the chart. 3-part video series. It's free. Go to our website under free offers. You'll see other ones. I also have the Arun indicator, very important one. Time and price relationship, something to look at. Click up here if you want to get there, or just go on to the website. You'll see free offers. I'm Ira. I'll see you all tomorrow.